love to ask the question, if you were to start over today with no money, no experience, what would you do? Sending them cold messages. And most people didn't respond, but the people that did, I hopped on a Zoom call with them. Usually had multiple per day. And I started with zero connections. Now I'm at around 6,000.
Hello and welcome to episode number, I believe it's number 8 of my podcast, Real Impact. Today I have on Weston Walker. He's 19 years old and he's got quite a list of accomplishments already. He's won the Illinois State Championship as a freshman golfer. Started an Amazon business and sold that. He bought his first fourplex at the age of 18. Competed in the U.S. Junior Am at Brandon Dunes in 2022 and started West Rock Equity at age 18 and has raised capital for a 112 unit property in Arizona. So that's really what I want to get into. I believe you'd raised close to $500,000 for that deal, right?
Yeah. Thanks for having me, Kyle. I appreciate you introducing me. So, yeah, my name is Weston Walker. This year I've raised $417,000 for 2 multifamily deals, one in Tempe and then one in Dallas. That was alongside Rise 48 and the Fund of Funds model. Really excited to get into this industry, trying to learn more about the different parts and different aspects of real estate at a young age, trying to learn from people that do it best. And so that was kind of the game plan, raising capital for a group that's a lot more experienced than I am. They can teach me the ropes, and I can give investors a solution to their problems. If they invest in the stock market, it might be less volatile. They get monthly cash flow, they get the tax benefits, and really excited to get into this industry at a young age.
Yeah, that's awesome. So you're 19 now, right?
Correct.
I think it's just
started when I was 18.
I think it's just incredible to see what you've been able to accomplish already. I just recently got started. Well, I guess I got started in real estate like 3 years ago, but I wasn't too active. I still had my kind of holding on to my W-2 job. And I guess if there's one regret, it's that I didn't get started earlier, right? So I mean, I think you're in a great place and think you're going to do some big things in the space. Yeah, what kind of goals do you have as far as, so obviously you're a golfer as well. So what kind of goals do you have in golf and in real estate? How you kind of juggle that and what's your plan going forward?
Yeah, so right now, I'm on the club golf team at Grand Canyon University. I went to Grand Canyon because I received a full business scholarship for tuition for 4 years. They gave away 2 scholarships incoming freshmen. I was one of the recipients and was really blessed with that opportunity. And I actually had 2 full ride opportunities to other schools for golf, and chose Grand Canyon for the business school, for the community, for the connections, and really, excited to be out here. There's so much opportunity in Phoenix. In regards to my goals, golf has definitely been a huge part of my life, and I'm going to use that to the best of my ability. But I don't want it to take up too much time where I can't do anything else. I don't put numbers on goals. Like, I don't say I want to raise all this money. I just want to make the efforts and make the actions my goals. And so to do those on a daily basis, to make the actions, because if I just keep doing those on a daily basis and do that consistently, then I can achieve the goals that I want. I just want my business to make an impact, really. I want to impact the people. In the future, I want to impact other nonprofit organizations, and really just want to help people out. I mean, right now, I'm helping people get monthly cash flow, like I said, giving them investment opportunities. And by the way, this is not solicitation for investments. You can contact your investment advisor for that. But, in regards to, real estate and probably next year, I want to branch out and do, higher cash flowing opportunities, possibly even shorter term, because some investors don't like locking their money up for about 5 years, which is usually the multifamily syndication route. It's a 5-year hold, and they get, monthly cash flow usually. Just depends what offering we invest in. But yeah, I mean, the cash flows are a little tight right now. They're around 3 or 4% in the first couple of years. They're value add projects, so they force occupancy a little bit, and so that's what drives the cash flow down. So looking at other opportunities, short term, mid term rentals, possibly even flips. I would only invest with an experienced flipper if they have experience in a certain market. So really just trying to find those connections and look at as many deals as I can before I choose who to work with. Really just trying to get those connections, look at as many deals as I can before I choose one and I'm confident to invest in them. So what I did when I got into multifamily was talk to multiple sponsors. I probably talked to around 30 sponsors before I actually chose who to work with, and then looked at as many deals as I possibly could on a pretty much a daily basis, and just try to learn and keep looking at deals, seeing what the returns and the risks are. And obviously the jockey is more important than the horse. I mean, we look at who's operating the deal, because if a bad operator finds a good deal, it's not going to work out. And so we put the operator before everything else, and who we work with is definitely the most important.
Yeah, that's good, man. There's a lot of good takeaways from what you just said. First of all, just I want to congratulate on getting the scholarship. That's pretty cool deal. I've heard a lot of great things about that. Is it GCU?
Yeah, Grand Canyon University. It's a great school.
Yeah, I've heard a lot of great things about it. So me personally, I didn't go to high school or college, right? So that's kind of a foreign thing to me. But sometimes I think maybe I should have, right? But anyways, it's in the past. So trying to show people that even if you don't have the education, you can still make it work, right?
Yeah, of course. I mean, definitely now is really popular with entrepreneurs. They don't necessarily go to school to be successful. I mean, you can start your own business online. Um, People and companies are asking less about your academic resume, and we're seeing that come to play. I mean, school is very important. I mean, I'm mainly in school um, for I wouldn't say the experience, but the connections here are insane. At Grand Canyon University, they have Canyon Ventures, which is a venture capital facility. It's a little bit off campus. Um, there's so many connections to get through that. Canyon Angels, which is an angel investing group here, and then also the different clubs and organizations that we can join to get more involved on campus and meet, the staff and possible donors on the campus. It's a very good community, and then especially in the real estate space, connections are the most important, and I found that to be um, very beneficial to what I'm doing. Especially my law professor, he's really involved in the business investing. He he connects me with people and he helps out with my business. He doesn't. He's not my lawyer. He gives me advice. Points me in the right direction to go. But I really appreciate all the staff pouring into students. They don't do this with just me. They do this with anyone who approaches them, and they really pour back into their students, which I really appreciate.
Yeah, I like how you're well, you picked a great school, but also you're strategic with your relationships there and try and get the most out of it. So that's good. You'd mentioned that you don't really put numbers on goals, that you just try to put in the effort daily, right? In those actions, and you know that eventually, if you keep doing that, you'll get to where you want to go. Because I've been looking at it the same way recently. I used to have more like the number goals, but now I've just started to do more, try to be consistent, because there's really not really a finish line, right? Because I guess a number for me means there's like a finish line, and really in life there is no finish line, I guess. So
Exactly.
that's very good. Yeah, let's get into so capital raising as a younger investor, a fund manager like you. That's something that I hear a lot. Like people ask, how do I get past that? Being a younger investor, and how do I guess, get people to buy into what my vision is? So could you just
Yeah,
elaborate a little bit, I guess, on what has helped you?
yeah, of course. That's a great question and something I definitely considered. People ask, like, the number one question when an 18-year-old approaches them for an investment opportunity is, why would I invest with an 18-year-old? And I had to figure out an answer to that question. And so what I did, like I explained before, is I partnered with someone in a group that was a lot more experienced than I am. They have around 240 employees now, $1.65 billion of assets under management. That's just in multifamily in Phoenix and Dallas. And so partnering with them and getting to learn from them, as well as raise some capital for them. Basically, what I tell investors is I'm leveraging the group's experience in order to bring you this opportunity. I'm not this first time operator. operating this building myself. I've never done this before. And I'm basically just bringing capital to the table in order to fund this experienced group's uh, experienced group's opportunity. And so that's what I do to get over that hurdle of being a young kid raising money. And there's a lot more questions that people ask. You definitely have to learn to answer their questions and kind of know what you're talking about. So learning as much as you can about the industry, learn how to reduce risk. Seems like investors they want to see higher returns, but they're more concerned on the risk tolerance of the investment. They want to see conservative projections. They want to protect their money, and that's the most important thing to them.
Yeah, like you said, it's about the jockey, not the horse. I'm curious. So you said you looked at like 30, is it 30 different sponsors before you kind of settled on the one you wanted to work with? Is that the right
Yeah, I
number?
didn't count. I didn't
Okay.
count, but that's just an estimate.
So what questions do you ask when you're looking to possibly work with someone? Because that's very important to vet the operator, and also I guess, yeah, the deal has to make sense, but yeah, the big thing is vetting the operator. So what kind of questions do you ask?
Yeah, I asked about the deal. I asked about their track record. I asked about the team members, if their management is in house. I asked about that. I asked about the investors' experience. I try to get as in depth as possible. After I get done watching their webinar or pitch deck, I ask questions about the deal. Just questions that come up when I'm looking at the pitch deck usually, when they send that, and really getting a feel for their integrity as well, because that's a very important thing when you're investing with someone. How honest are they with their money or with your money? You also want to vet the underwriting of the deal. And so what I did is I was an inexperienced underwriter. I don't consider myself an expert at this moment. I want to leverage someone else's experience underwriting. And so they have an in-house underwriting team. I also used for this last deal in Dallas someone else to help vet the underwriting, make sure it's all legit, and just want to make sure everything is safe. I mean, I don't like to use the word safe, but there's always risks in every single investment, and we just want to mitigate those for our investors.
Yeah, I think it's important to, even as a manager, like a fund manager or someone that's raising capital, it's good to know, still, like, to know the ins and outs of the deal and the numbers, because for one, from what I've learned, you can kind of different spreadsheets, like all spreadsheets are different, right? And it can be easy to kind of even manipulate the numbers on a spreadsheet to kind of make the returns look better. So I think that's a good thing, is just to know the numbers and be able to kind of pick them apart, and also to answer questions to investors, right? Because anyone that's going to invest with me is going to ask me a lot of questions. So being able to have at least some of the answers to those questions is huge. What are your thoughts on the current market and kind of where it's going? I know we don't have nobody has a crystal ball, right?
Yeah,
But I guess, do you have any predictions or any ideas of what you think it's going to do?
yeah. I don't want to predict the market. Warren Buffett doesn't predict the market. I just want to buy assets that have tailwind in the demographics that are not the demographics, but the asset class trends. There's a shortage on housing that drives people to multifamily. The price of homes are high in Phoenix and Dallas, and also with the high interest rates, that pushes more people to rent. Prices are down 20 to 30% in these large multifamily properties from last year, and there's a lot less deal flow because operators don't want to sell in this market. They don't want to sell for a discount. And then also, yeah, there's a lot of people sitting on the sidelines, and then institutional capital, people pulling their money out of REITs, that forces them to sell. And then also people who took floating rate debt in the previous years at lower interest rates are now seeing the increase in expenses. They're not cash flowing. That forces them to sell, and that's really the only deals that are on the market, is people being forced to sell because of the high interest rates.
High interest rates, so a lot of the deals don't really pencil out in this current environment. But what I've seen is, if a deal like pencils out with let's say a 7 or 7.5% interest rate, that's a sign that it's a pretty solid deal. Versus buying at a lower interest rate, it can actually hurt the deal, because like a lot of people found back at, like, in maybe 3 years ago, they bought at that interest rate, and now the property is worth less, right? So there's definitely like a give and take there. with the high and low interest rates. I'd like to talk a little bit about um, so for me, mentorship is important, and I think for you as well. I was looking through your I think it was your Instagram, and I saw you had a picture with Doug Collins. Is that right?
Yeah, Doug Collins. He's a huge mentor of mine who gives me advice on life. I'm not specific to real estate, but he is. He's a very successful basketball player, businessman, family man, and he's gone through life. He's had so many opportunities, and it's great to learn from people like him. Not just real estate, but life as well. I've also had the opportunity to speak with Jerry Colangelo multiple times. That's the scholarship I received that I was talking about earlier. He gives away, one or two scholarships each year, and that's the incoming freshman for business. And it was very, very generous of him. He's the Colangelo. It's called the Colangelo College of Business. That's what he's donated so much money to the school and invested in it. And you know, having the chance to meet with people like that is just so fortunate because they've gone through so much and just trying to learn from their experiences. I love to ask the question, if you were to start over today with no money, no experience, what would you do? And most successful people have never been asked that question. They usually ask, what did you do to get to this point? But that doesn't include all the failures and what they would do differently at this point in time. And so that question is gold. And I've asked that to so many successful people and got some really good feedback. So that's what I do when I meet mentors. I try to ask as many questions as possible, usually open-ended questions, and try and learn from their experiences and failures.
Man, that's so good. I'm gonna steal that one. But
Yeah, steal the question.
yeah, definitely. But those are some like high profile names. So I'm curious, how did you get to meet them in the first place?
Yeah, so my grandpa coached a camp with Doug Collins. My grandpa was a high school basketball coach. And then, funny enough, my grandpa grew up with Jerry Colangelo
Really?
in South Side Chicago. It was a poor neighborhood. And so they just stayed in touch all those years. And, we're from Illinois. Like, my dad's a fireman. We don't have, insane connections in the real estate space. I started LinkedIn in December of 2022 and with nothing because I didn't have any connections in the real estate space that I could actually work with. And so I just started reaching out to brokers, managers, industry investors, and sending them cold messages. And most people didn't respond, but the people that did, I hopped on a Zoom call with them. Usually had multiple per day, and I started with 0 connections. Now I'm at around 6,000 of this year. It's December of 2023, so about a year now. Just really getting connected online, and in-person meetups have been huge as well.
Wow, that's incredible. That's a lot of names and a lot of connecting. I think that's like the big thing that separates people that find success and those that don't is just the consistency, just day after day, doing the things that it takes to win. And I think that's incredible. You said 6,000 connections now.
Yeah,
That's pretty impressive
I posted daily for a while.
on
So
LinkedIn.
that was huge. And then, just connecting with people and then reaching out as well.
That's
I usually try to send personalized messages. So like personalize the first line and then do a couple lines about what I do and then just make it short because people don't want to read a long pitch. I just want to provide value. There's that reciprocity there. And so we could collaborate better.
Yeah, I'd like to ask you more about that because so I'm part of a mentorship. They're doing a capital raising blitz. Like there's a 2 week long thing where we're all kind of holding each other accountable and people were asking about that LinkedIn, how to utilize LinkedIn. So you said you posted daily for a while. What were your posts about? Was it just like educational content about
Yeah, usually
apartment
just
building?
real estate education.
And so the
Stuff I was, thinking metrics, not metrics, but feedback from, industry leaders, just observing what's going on usually.
Mhm.
Then also experiences I've had, just anything to help people out.
That's awesome. I'll definitely share that with the group. I think it'll help out a lot of people there. So appreciate you shedding light on that. But we're getting, I guess, towards the end. I always like to ask like some books you've read. So like maybe two or three books that you've read that have helped you, if you have any.
Yeah, no, of course. I mean, in terms of real estate investing, I'd say for beginners, Rich Dad Poor Dad, very popular book. If you're interested in apartment investing, I'd say Grant Cardone wrote a very good book. It's not a popular one of his. Most people don't know if he wrote this. It's How to Invest in Real Estate, Grant Cardone, something like that. I can't remember the exact name of the book. And also Good to Great by Jim Collins. All his books are very good. He really focuses on building the business, not necessarily the early parts of the business. He really observes companies. He's a professor, very metric driven, and so his writings are backed up by data. And so that's what I love about Jim Collins is all his books are very very real compared to other ones.
So Jim Collins, did he also write Built to Sell? Do you know? I th
Not built to sell. It was built to last.
Built to Last. Okay, gotcha. That's a different author then. Yeah.
And
So
then he wrote How the Mighty Fall, and then I don't know this other one's the Blue Book. He wrote I think four books. They're all
mhm,
very good. Yeah, if you're a
definitely.
beginner, you probably don't need to read How the Mighty Fall. I'd say Good to Great is the best one for
Mhm.
beginners or even successful business people.
That's awesome. Thanks for that. One of my favorite, actually my favorite podcasts, Patrick Bet David. I don't know if you're familiar with him at all, but
Oh yeah, Valuetainment.
yeah, he talks about I think he interviewed Jim Collins once, and he talks about some of his books. He's really high on those books. Oh, awesome. So I like to ask people like, what is there anything you need right now? Um, if someone is listening to this and has, I guess, is there anything that you could use from the listeners?
Anything that I could use. I'm not
Like,
allowed to pitch investment opportunities, so I'm not going to
yeah,
say that.
yeah,
But you can reach out to me at Weston at westrockequity.com. My LinkedIn is Weston Walker, Weston Walker on Instagram as well. Would love to collaborate with you if you have any deals. I should be careful what I say here, stay legal, but yeah, just reach out to me, see how we can collaborate.
awesome. Yeah, definitely go check out his social media. Weston Walker, definitely a good guy and someone to definitely collaborate with. Appreciate you joining me today. I had a lot of fun, good conversation. Appreciate you hopping on.
Of course. Thank you, Kyle.
Yeah, absolutely. And I know you're gonna do some big things, so I'm looking forward to seeing what else you accomplish in your life. So I'll definitely be watching.
You as well, Kyle.
All right, we'll see you. See you on the next one.